I'm going to share with you guys probably one of the number one traps that people who trade US markets fall into on a daily basis. So what we're looking at here is we're looking at the E-mini S&P on the 2-minute chart on regular or electronic trading hours. So this is showing pre-market. This black line is from the start of the day. This is the daily VWAP start anchored from the start of day, and then the blue line is the New York VWAP anchored from the New York session. So what we have to keep in mind is not everyone's trading futures, and a lot of people are just trading SPY. So this is the chart that they're looking at, and they just see this big gap up. They don't see pre-market. But when you're trading futures like I am, you see the pre-market action. So the number one mistake is being too late to the trend. Now, it's almost never too late to buy in when you're trading, a US market because the US markets generally just go up. But it's really important to have your entry timing correct. So if we see here pre-market, we made a from the start of day to the pre-market highs. That was a 0.82% gain. That's a really big move. That's a healthy move. And as you can see, there's almost no pullbacks. So you get a few minutes of pullback here, then it just trends up. You get another 15, 20 minutes here, continues higher. And then this one candle before the open was a Donald Trump tariff tweet news. So it wasn't even like necessarily factored into the market. It just happened. But you can see we recovered that extremely quick. So the mistake people make is, oh, look, so let's switch it to regular trading hours. Now that we see pre-market, we know what happened in pre-market. Now, in regular trading hours, the high of the day was a 1.3% gain from the start of the day. Now let's be clear, everything was rallying. We were trade the market was very bullish, but at some point we need a pullback. And when you go back to the 4-hour time frame, it's really clear that we needed a pullback. Because look, it's just a bullish bar, bullish bar, bullish bar, bullish bar, 4 bullish bars in a row across multiple days. This is from Thursday all the way to Monday. So a pullback is expected here. And we try not to use the word expected too much in trading, but it is expected at this point. So my question is, how many people were in tune with the market to realize that? Because if you're just looking at the 2-minute time frame, you just see the market's super bullish. It's great for longs. Why would I not take this break and expect it to go to the next level? Now, the next level is 6100. This is a really strong level on ES, but that would have been a 2% gain from the start of the day. That would have been a 2% gain with no sustained pullbacks. That is where people get caught. So we this is the daily VWAP, and now let's just break down my trade for a minute here because this is the trade I took live. You guys can go and see it on my Twitter, and I I just took this high of day. So we rally, we make a new high of day. I set an anchored VWAP to the high of day, and then I just take the break of the high of day VWAP with a stop at the last structure. And I end up getting my 1R. It's only 7 points, but I sized in slightly heavier to factor that in basically. And as you can see, it was just I was only I took profit at 64. The high of the day was at 68. So I only missed out on 4 points, which is not a lot. But someone who's trying to make their 10 points, their 20 points from their entry, they're sitting in this saying, this is a great trade. Higher low on bottom, higher low, higher low. It's going to continue up to my target, no problem, because I'm trading with the trend, but they weren't in tune with the market as a whole. Now, I just want to run over this tweet real quick because This is the short play I've seen on repeat. It's not an obvious play, and it's a bit risky as the timing is crucial not to fade the longs, especially on a day where the market is rallying. But when you have the timing right, you have a clean short. Now, here's the thesis behind the short. And this is the trade that I am talking about. It's this trade, the break and retest of the opening range low with the stop at structure, trading to bottom of range. So now you can make money going long and then make money going short in the afternoon on days like this. So the thesis behind the trade is simple. Pre-market is bullish anywhere 0.7% and above, 0.6%, anything like that. You get no sustained pullbacks into the New York Open. Buyers take control with strength and shove price in one direction. There's just a one directional trend. There's no pullbacks here. At some point in the first 2 hours, buyers lose the steam. There's no strong catalyst. We had no news today, no large catalysts. So if this was going to move 1.7% in a day, it's going to have pullbacks, meaning it's going to continue higher. If it's going to continue higher, it's going to have pullbacks. The obvious target today was 6,100, like I said, but that would have been a 2% move out of nowhere. Not that it's not possible, but it's less likely. In trading, we always play to the probabilities. So expecting this to move higher is just it's the less probable trade. So I hope you guys took something away from this. Let me know in the comments if you guys prefer to go long, short, and how you guys handle days like this, where it's difficult to find an entry because you have to buy near the high of the day.